Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming with you, with the market recap for Friday, the 12th of July. Ended the week pretty strong. The bulls really followed through on that little break that we've seen in the market, closing very green for the most part. Pretty much wherever you look, we did see a little bit of profit taking over in utilities as we kind of are battling at that resistance. And good afternoon, Jimbo. Great to see you, sir, as always. Hi, Lauren. Great to have you with us. Hope you had a great day trading. Kind of just a day of resistance for utilities. We saw a lot of follow through from what we saw yesterday over in healthcare as well. The plans still showing well. Humana, UNH in particular, both some really nice movement here today. The drug makers continued to tank, and it started to bleed over into some of the more medical devicey type of companies as well, as healthcare remains a little bit rocky right now, at least going into next week. Still think we're going to need to be careful with that. On the earnings front, it is here. We are officially in earnings season. This Citigroup will be reporting on Monday morning before the open. So not a big Monday, but that'll get us going. There are over 50 S&P 500 companies reporting earnings next week. We've talked a lot about the financials, but there's a lot of big names. JP Morgan, Johnson & Johnson, Bank of America, Citigroup, Wells Fargo, United Health, Netflix, Honeywell, Philip Morris, IBM, American Express, the list goes on and on and on, right? So we are getting into earnings season. I definitely felt that today as I was scouting for trade setups for next week. About half of the things I found I had to kick off because they were too close to earnings. So that's when you know you're in earnings season, when your watch list is half the size as normal because of all of those announcements coming up in the next couple of days. Yeah, great close on Home Depot. We saw some really good movement pretty much across the board. And, it was an easy day for us bulls. There's no doubt about that. Gapping up on the open and really just drifting right above that 15-minute 9 EMA all day long, even closing tremendously strong. Much like Home Depot, Lord, S&P, most of the indexes, the rut did a little bit of profit or a little bit of selling at the end of the day on the rut. But all the other indexes closing very, very strong at all-time highs. I don't really have any great analysis to share with you guys. We've broken out of pretty much everything, right? Even closed above 3,000 here today on the S&P, hitting an all-time high. Hard to say anything too negative about it. Maybe earnings will give us a push one way or another, but right now feels like the market is in pretty bullish hands, at least right now. Over in the Dow, even better day. I mean, that is a beautiful candle following yesterday's beautiful candle, closing above 27,000 yesterday. So things are looking, I get so frustrated, Lauren. It doesn't really bother me, but it does annoy me. I kicked off at least I think 5 or 6 things that would have been like shoe-ins for the scouting report, but they've got earnings in 5 to 13 days. It is what it is. We can complain about it. We probably will, especially by the time we're at the end of the month. We'll probably all be complaining about it. Right now, we'll just roll with the punches. The nice thing is there's always somebody. We'll get through a bunch of earnings here next week. Then we'll get a whole bunch the following week, but we'll have a whole new slate of stocks to work with post earnings. So there is a light at the end of the tunnel for sure. And good afternoon, Linda. Great to see you as always. Hope you had a great day trading here. So again, Dow Jones all-time high, beautiful candles above everything. Hey, it might come all crashing down on Monday, but I can't see any reason why it should. And so I'm going to continue to go with the trends, go with the charts, because that's what we do as traders, especially swing traders. So whether this is a good idea that we're running to all-time highs or not, who cares, right? We're just going to enjoy the price action while it's going. So over in the NASDAQ, another break of resistance, follow through on that break of resistance that we saw midweek, another really clean close, top to bottom. On all of these type of charts, I'm just going to be looking for that follow through on Monday morning. So we can kind of check the futures market before the open, see if we're going to get a little bit of follow through from a broad perspective. Breaking above today's high is about all we have to work with, right, at this point in time. And that means things are going pretty well. Over in the rut, we had a really nice bounce back day, worked right back into that old resistance zone in that 1570, 75 range. Did come off of that, unlike the rest of the market, and I don't think this really matters a lot, but unlike the rest of the indexes that really closed at high points, did see a little bit of profit taking towards the later part of the day here, as you can see on the rut, but really not a whole lot to see here. Keep an eye on this resistance zone. If we can close above that, especially with our other indexes breaking out, there is quite a bit of space between this zone and our next real level in that 1600 range. So, from a management of condors, or even maybe directionally speaking, a break of that should give us a signal that there is maybe a little bit of room to run on the rut. And as we all know, rut can definitely play catch up in the short term. It usually finds its way back into the middle, right? But it can definitely have some big days, as we have seen on both sides. So things are looking pretty nice for the bulls going into early next week. That's they took this one, and I think let's sneak in really quick and take a quick peek at the weekly on the S&P, because this really kind of sums up this week. Unless you're in healthcare, and even energy started to fight back today, that is a nice clean confirmation candle on a weekly cup and handle pattern. At least in my opinion, it is. So technicals are looking very strong, very bullish as we work into next week. Taking a peek at our sectors, for the most part, it was a good day all around. It really was. It was healthcare and it was utilities. Utilities were just hanging at resistance, right? Sometimes you're up a little, sometimes you're down some, but healthcare really continues to see a lot of movement. In the material sector, nice upward movement here today, pushing back above those moving averages, that 58 zone, looking a lot like a pullback in the sector. I think we continue to like it. I think with just a little bit, and maybe we don't even need this, but with a little bit upward movement, I'll be sure of that, we can call this low that we set up here on yesterday, and it's kind of lining up with our lows from back in June. I think we can call that support. I think we can call it support right now, but with a little more upward movement, I will officially call it support. Things are looking very nice. We have a little bit of resistance, of course, in the form of our swing high that we will need to contend with. Beyond that, though, we have room to run, in my opinion, one of those areas that we do have some room to run. Same cast of characters as usual going into next week that I'll be keeping an eye on over in the materials sector. There are going to be some earnings to be keeping an eye on, but it is pretty light for this sector. So a little bit of upward movement, looks a lot like a pullback, showing some pretty good strength. Over in energy, knocking on the door of resistance. So I think you have to like where we're at least from an attempt perspective. Now, we haven't broke anything yet, and if we do, we still have to contend with other stuff. I'm going to continue to leave energy alone for the most part. I've got a plan for two things in my watch list next week. XEC on the downside, an E&P company for a little bit of a breakdown if we sell off of that resistance level, or if we just sell in general. And I've actually, kind of working through ExxonMobil. I think they're my favorite potential bullish breakout candidate if we do break within the sector. These are the only two energy companies I feel like I should have a bull and a bear in energy being at resistance going into next week. So I'm pretty satisfied with just two personally. I still don't think we get the clarity. Even if we break, I'll call it a break, but then we have to worry about the 200. We should have been worried about it last time, right? So we have to worry about it. There's so much strength in the market. I'm not trying to mess around with things that might be turning around personally. So probably not going to be doing a lot with energy. If we break this resistance, though, certainly think you could call it a bullish signal. If this holds, we start to see some selling. don't think we really have a lot of information still. I think we are, if we do sell off of this, price point, I still think we're in a range. So very, very difficult area. Finally hit the stop loss over in Oxy here today, as it finally was able to stick its nose above the 50-day moving average in the swing high. It tried, but we'll see where it goes. I guess it doesn't matter to me anymore. So over in financials, nice solid break here today. Really great follow through from yesterday's break on Goldman Sachs. This area in particular, there's not much that we can do if we're not the type of traders who hold through earnings. We've got a ton of earnings here next week, and so it's just going to get your popcorn ready. Let's enjoy it, as at least that's the way that I'll be approaching the financial sector. It's strong. That is a nice break, of that resistance level. We have room to run, not any resistance of any note until we get into that 29 range. Good little breakout, bad little timing, at least in my opinion. Lots of earnings. They can certainly impact this one way or the other. So financials, for the most part, different reasons than energy, but for the most part, I probably don't expect to do a lot with them. But as we work into late next week, we'll start getting a lot of them behind us, and maybe we can get some clarity and some decent technicals after some earnings announcements for some interesting trades next week at this time. Over industrials, we had a really good day in industrials, holding support yesterday and working all the way back up. And if you don't call it a break of resistance, you probably just need a little bit of upward movement on Monday to call it that. Really strong movement in the industrial sector today. That support level holding like a champ, definitely good to see. And giving us really good information too. We know that this is a big deal. Now we've seen buyers off of it here. We saw buyers off of it here. If this support gives out, and I don't think there's any real reason to suspect it's going to, but if it does, that should be a pretty clear signal as far as, okay, maybe there's something we need to be worried about, at least short term in the industrials. A break here is a pretty good signal. We've got a little bit in the form of this old swing at $79, and you guys know the drill. Beyond that, it's really into $80. So there's not really any major resistance until we get into that $80 mark. So it's a little bit of room to run over in the industrials. Really solid price action, really top to bottom, much like the broad market today. Really just a very strong sector. Over in tech, just continuing to drift to the upside. Our old friends in at Cisco were able to close above resistance here today for the first time. We've breached it a handful of times, and first break traders, certainly probably know that. But this is our first, at least in my mind, our first close above that resistance. Still over a month until earnings on Cisco. Certainly an interesting bullish breakout candidate in my mind. Certainly I'll be keeping an eye on them early next week for sure. But beyond Cisco, I mean, it was a pretty good day in tech and in discretionary in the NASDAQ. So no surprise, we're seeing some very nice movement. Same with the semiconductors. Very strong candlestick after that little pullback. A lot of nice movement in semiconductors. So we are looking pretty darn strong in technology in particular right now. And a lot of things are looking strong, but tech is really looking good to me as we're going into next week. All-time highs on the ETF, just like the NASDAQ. So where is it going? I don't know. We'll just go with it, right? So we can kind of watch these short-term moving averages potentially act as some support catalyst for us if we see a little bit of pullback action develop here next week on pretty much all of these type of charts. That's kind of where I'll be looking for the first level of support. Over in the staples, just another inch forward, just continuing to do what they do. We talked about them yesterday. Did see some selling off at resistance here today. Not necessarily a bad thing because didn't break resistance, so no big deal, but certainly a breakout candidate, I think, over in Pepsi post earnings. We got a little room to go. Probably don't have to worry about this breaking resistance on Monday with where we are today. But that downward movement, actually, believe it or not, that makes me like the breakout better, even if it makes it a little less likely that it ever happens. And so I want to build up the suspense. I want to build up the, oh yeah, I can't wait for Pepsi to break through that. And the longer it takes, at least to my brain, that's how it feels to me. So going to be going in my breakout list for sure. If you don't like Pepsi, you're going to have options out there. Clorox, another one knocking on the door. They could trigger as early as Monday. Heck, you could argue they did today. A little bit of upward movement. Pretty tight on earnings with Colgate here. They're kind of on that. Yeah, we've got 14 days. They're right on that threshold. So, and these are just a couple. There's certainly breakouts over in the staples. If we are interested in them, there are definitely some breakout plays over there. Over in utilities, again, just nothing to see here. We've got to battle this out at resistance. So either we're waiting for a pullback for new entries, or waiting for the break for the signal for new entries. At least in my opinion, that's how we should be looking at XLU. I've kind of been, pretty consistent with that this week. I'm going to continue to look at it the same way. If we see some pullback and some signals, sure, we could talk, but until we get that, I think we have to just assume 61 is going to be a short-term wall for us. It's going to be a little difficult to break through. So again, for me, breaking above that, great continuation. If I'm in things, I'm not worried about it. I just understand that, hey, it's resistance, makes sense that it struggles. It's not supposed to be easy to break through resistance. Sometimes it feels that way. So over in healthcare, again, another very volatile day. We were really selling off, and it did work its way into everything that was not a healthcare plan. Today, it really started to impact some of the device companies, nowhere near to the same extent percentage-wise, but we were certainly seeing more selling in the devices than we saw yesterday. We did come off of the lows to kind of illustrate. I mean, this is kind of a volatile place right now, and I think it's a place that we do need to be fairly careful with. We did come off of the lows, and so there was kind of that late day surge, and whether that was short covering or legitimate buyers, I would assume maybe a little bit of both. I would assume it started at least as some short covering, an area that I do think we have to be, fairly careful with going into next week until we kind of see this volatility die down. I think we should just assume that it's going to continue to be here. Maybe we are wrong. Maybe it won't be here. Maybe it's over. But I think that's always the way to play stuff. When things get a little bit volatile, treat them as if they're going to stay. Great movement over in the plans, though. UNH, great follow through after breaking yesterday. Of course, 2 levels of resistance yesterday. Earnings next week. So if you, for whatever reason, did play that, well, congratulations. Nice job. Just keep in mind that we've got that here coming up with earnings next week. Humana, another nice move here. Got a little more time going into earnings, closing above that 200-day moving average. And of course, CVS, we're going to keep an eye on these guys until we fall back in this range. But they did hold this support zone here today. We've got about a month till earnings on them. We need a little development, but if we can kind of hang out here and let this 9 rise up and then see some upward movement, there might be something here. This is almost certainly a 2 weeks from now trade if it's able to develop, but I think it's worth keeping our eyes open and just a little, keep it on the watch list. I can't see any scenario where I'm going to be jumping in next week, but if we kind of hang out here and let these short-term averages catch up and give us a little bit of a boost, I could certainly see being very interested. Over in the pharmaceuticals, they took a beating again here today. Johnson & Johnson, an absolute bloodbath, break of support and just ran. Pfizer not looking a whole lot better. Merck, after breaking that 50 yesterday, more follow through. We were coming off of some lows. I was kind of doing an example here, as you can kind of see. I forgot to delete some lines. So Merck is looking pretty rocky. AbbVie broke down again, although again, much like the rest of the sector, did kind of run back up off of those lows. MDT, an interesting one. If I'm looking for something in healthcare, we were able to hold that breakout point. It's probably easier to see this on a weekly. We still have a lot of time before earnings. So if we can kind of take out these tops that we've kind of developed over the last month, that might be something from a breakout perspective worth taking a peek at, if nothing else. Holding the breakout point is certainly a good start. Abbott, another one of those strong trending stocks, big bearish candle. Eli Lilly, which I know some of us are working with, big day. It came all the way almost to support here today and then really rallied up off of that. So, well, a nice rally on the intraday doesn't really inspire a ton of confidence when we look at these charts, right? So I do think we need to be a little bit careful within this area. I think we probably need development. I had very few things that I thought were interesting enough to look at next week in healthcare. We almost need a little bit of development to kind of reset these charts before we can do a whole lot. And a lot of course, UNH, probably the prettiest one, has earnings next week. Love that. Over in the discretionary, another great day in another great sector. I mean, it is just, this has been a very, very good place to be and a very comfortable place to be as of late. Really just continuing to push up and up, never really even having so much a serious intraday retracement. Continues to show a lot of strength. I know, Lauren, you brought up our good friends at Home Depot. Hard not to love the way that that's closed. Great thing about Home Depot, we don't have earnings for over a month, so we've got time to work with this. And it went well beyond Home Depot. I mean, there was, just about everything. You had McDonald's pull back to its 9 EMA and very quickly bounce off of it. It was very fast. You probably had to be sitting there literally at your computer to do anything with it. Another decent day for Amazon, still kind of hanging at that old resistance level, right? But that makes some sense. Nike, another good day. I mean, it was pretty much across the board. Starbucks still running after that break. So this is an area that I think you have to be more bullish on than average, at least compared to the other sectors right now. Things are still looking good. Even some of those, brick and mortars, but not all. You've got big. We were talking about this one in the halftime report here today. I was watching them a couple days ago. I threw them up on the Tackle Trading Twitter as a breakdown candidate. They broke down yesterday. Continued downward movement here today. Heck, I'm going to have to go to a monthly chart just to kind of see where there is anything. And as you can kind of see here, there's not a lot. And so this is a big breakdown in my personal opinion, at least, certainly to show that while there's not a lot of bearish candidates out there, there are certainly some that are probably going to be interesting to you. With something like this, I know, Ilka, I'm not sure if you're with us live, but I imagine you'll catch us later if you're not. The easiest way to move into it is basically ask yourself one of two questions. Do I want to come in on continued momentum? That's going to be an easy entry, just breaking below today's low. There's really nothing left to do. That would sneak it in on this 15-minute chart. You can kind of see that'd be a 15-minute breakdown as well. So if we want to, jump right in this type of a pattern, makes a lot of sense that way. Or we can look at it. Let's see if we get that consolidation floor, that short-term floor to build. Maybe this extends for a few days, and then we give out, or we retrace back into that 9 EMA, that breakout zone or breakdown zone, and look for an entry later in the week if we want to be a little bit more conservative. So a couple of different ways that we can play that depending on how you would like to. These are definitely an outlier, though. The beautiful chart, this one, Lauren, talking about the things that frustrate you on earnings, is Ford. Now, luckily, Ford's cheap, and so it's very easy to play stock with it. So we've got earnings here in just a couple of weeks. These guys were on the reports. They were on my watch list for a break of that 1050 resistance level back in May. Of course, May sold off, and life moved on. We all forgot about Ford, but here we are again. A lot of movement, decent volume working into that resistance zone here today. If it's early next week, I might think about taking a closer look. I don't know. We're going to be close at 12 days. But it is an interesting chart. And whether I'm trading for it or not, it's supposed to kind of show how much strength we are seeing in the discretionary sector right now. Yeah, it is. That Ford, I was really excited about this break. And it just never was meant to be. Now we're here again, and I'm looking at 12 days until earnings. Come on. Couldn't give me 21. 21 I could work with. So I could work with 21. 12 is going to be cutting it awfully close. There's probably going to have to be a hard pass, whether I like it or not. Over in REITs, a little more selling here today. We're just kind of in a pullback phase, I think, on REITs coming off of that resistance zone. When you look at some of the big, the big names, for the most part, they are still looking in their upward trends, kind of bounce off. You see that's a lot of bounce off of the 50. Instead of running straight back up, we kind of go into that little right? We run up, we kind of have a pullback or consolidation zone. SPG still struggling pretty tremendously, but most of the other big names haven't really broken trend or anything like that. Prologis could be an interesting retracement candidate, but not Monday, at least not for me. So it looks like it's just more of a pullback at resistance as opposed to anything bigger than that to me in the REITs. But we probably, if we are looking REITs, we probably need a little bit of development early next week for some nice clean entries on some of those pullback opportunities. And lastly, over in communication services, pushing up, continuing to move up, technically breaking that resistance level. So what we're going to have to do is go into the weekly chart, and it's basically the next resistance is the resistance, right? This is a relatively new ETF, as you guys know, but this high up here, just shy of 52, is kind of the next thing to be looking at. Of course, most notably was Facebook here today, really rewarding the breakout traders of Facebook. It was a little slow to get going, but it really popped nicely here today. So good movement in Facebook. Google, of course, holding its own. And that's really, if you're trading into the sector, that's all you really ask, because the big Google and Facebook aren't going against you. It's always easier if they're going with you, but it's a lot more difficult if even one of them are going against you with how much of an impact they have on that ETF. So things are, continue to show good strength over there. Of course, Disney breaking out earlier in the week. Certainly a lot of us here at Tackle Trading, I know of, we're keeping these a very close eye on Disney. Continue to hold that breakout. We've got some time before earnings, so certainly some good things going on over in the communication services, showing quite a bit of strength, benefiting from some of that tech movement that we are seeing. Over on the VIX, nada. That's a big nothing sandwich here today. Not much going on. We hit an all-time high. It's hard to imagine a big spike in volatility is going to go along with that. Over in the dollar, a little more downward movement. I don't know what you do with this at this point in time, other than say it's neutral for the second week in a row. I've put it right at 50 as I was going through my rankings, right at smack dab. I am not going to take even a slight stand on the dollar right now. If you are, I guess I don't understand from a swing perspective where you're coming from. Bears are in control right now. I think we would agree with that. But now we have moving averages and support and old support, and I don't want anything to do with the chart that is that messy. So from a swing perspective, we're still in the middle. I think until we get something easy to identify, that's how we have to go. On gold, still hanging out in that range. Again, the biggest problem with gold isn't that it's not still bullish in my mind. We're still holding support, higher highs, higher lows. It's that we're kind of smack dab in the middle of the range, right? And we bounce very quickly off of the bottom of the range. So anything makes sense from a bullish point of view to me still in gold, but for a really nice setup, it's not there right now, at least not in my opinion, or of a position / cash flow place to be right now, until we probably have to break 1440 for me to stop saying that. But it does give us more information that this support zone at 1385 is definitely important to gold right now. Every day above it, that's giving us a little more information in that regard, at least. And over in silver, it's just like gold, except uglier, where I'm comfortable cash flow position on gold, just kind of hanging out. On silver, again, boomerang style, way out of the money, naked put, sure, why not, I guess. But anything directional or position wise right now, it's just, it is weird. Its price action has been very awful from a trading perspective, at least in my mind, for a bit now. Nothing new to see here at this point in time. 1560 still the best place that I can see currently for a trading opportunity for the directional side. A breakdown, you could make a case, but let's see where we are when and if that happens, right? That happens on Monday. I don't think you can make that case, but if we drift down and hang out and then break, maybe we can have something there. So it continues to be a stay away from for me. Over in natural gas, it made it interesting all week long, and I really don't know how much it taught us by the end of the week. Number one, a positive note for the bulls. We did close above the 9 EMA on the weekly time frame. That is the first time that this has happened in a long time. We've broken the 9, right, on that weekly, but we have not closed the 9. I don't literally think since we were going on that insane bullish run last year. I think we have to call that a little bit of a bullish signal. Enough to trade, well, that probably depends on how aggressive you are. If I am thinking that, yes, that is enough to trade, probably going to be looking at confirmation above the highs of this week. Let's make sure we can push through this little triple top that's developed here on the hourly for that confirmation. If I'm looking, that's going to put us about 250. before much to see from a potential bullish point of view. On the other side of things, if we push down on the open this week, on this weekend, I think at this point, if we want to see anything bearish, we now have to get below that 9 EMA. As long as we're above that 9 EMA, I do not think we can go bearish on natural gas with where it closed here this week. So the open might be interesting. It could push us go below this little zone, below that 9, maybe getting, because it's still, with some downward movement, it closed above the 9. We are going to give it the respect it deserves, but that's still a doji at the old breakdown point. I mean, let's not get too carried away, right? That is still a doji at that old major breakdown point. So any downward movement could be enough to trigger some bears. So we're in an interesting spot going into early next week where I think you could make a case. Downward movement could be an entry for traders looking at it from a weekly perspective. Upward movement could be a little bit of a breakout on the daily perspective, getting above that breakout zone, getting above those highs of this week. It's going to be an interesting one. So check that open. I don't know if there's anything to do. Probably not Monday. We don't need to feel like we have to run after anything, but it's going to be an interesting one. And lastly, over on crude, just hanging around, and not really making that much room. Good afternoon, Rick. Yeah, just that's a tough battle. And that's a tough battle. Not terribly surprising that it was very undecided. I mean, that was a major price point. Got also those moving averages. So to me, it makes sense. I think we need a little more information in natty gas before we can get too carried away on either side. You could start to make cases on both sides though. So a little movement could go a long way. Over in crude, not a lot of movement here today, just hanging around, holding above that 60. Gotta like that. Overall, if you are a bull, not a lot of movement here though, but we were able to close above these moving averages here. So I think we can really look at the break above this week's high as a little bit of a confirmation of more upward movement to come here on crude oil. So I think you have to have a little bit of a bullish bias with where we closed here, a little consolidation. Maybe the first half of next week before a break of that resistance zone would be really nice if we're able to get that. So that is where we find ourselves here going into next week. Jimbo's got eBay in his watch list. Let's take a quick peek at them here. We got, again, it's the same deal, Jimbo. Until we break through this resistance zone, you're just on a holding pattern. Right, we're still holding, our breakout channel or our breakout point. We're still in an upward trend. This is just a battle, and until we either break support down here or break resistance up here, you stay skewed. At least in my opinion, you stay skewed to where we are right now, which should, in my mind, be bullish. Breaking resistance and things like that. Got to break that resistance level to get that next surge of movement. Who wants to buy at resistance, right? That's why we love breakouts. If we can. Thing about eBay that I think you can like is there's some room to run. Now, on the negative note, it looks like I don't follow them in my day-to-day travels, Jimbo, but it looks like they've got earnings next week, which means to me that we're about out of time. So it's going to be a post-earnings evaluation for me on eBay if that is true and they have earnings next week. Not much that we can do with it. Just fighting at resistance, though, on eBay. Some interesting characters going into next week. We've got Baker Hughes, a GE company. I don't know how Tim's going to feel about that one, but kind of hanging right at the form of a little bit of a breakout within the, with the energy or oil field services, a little bit of upward movement. We may be able to call that a break. We're still knocking on the door on Lynn. That could break as early as Monday morning if it wanted to. Knocking on the door. Don't have earnings to worry about there. Of course, Echo Labs, I think that's very much worth keeping on a bullish watch list. Personally, we looked at Exxon. You've got BG here. Probably a next week one, but I did kind of like where it was. And if there's strong movement in the market, I could see a little bit of a break. I didn't love these guys, but I did think they were worth keeping an eye on, and especially since you have to cut out half of your watch list because of earnings, you're kind of a little more open. Nice pullback, a lot of movement here on Fortune Brands. Risk to reward may be a problem, but a nice confirmation candle off of that pullback. A little bit of a pullback going on in flow, going to need some movement over there. Pepsi, Tyson, both breakout candidates. with a little bit of time before earnings. So they're going to be staying on my watch list. HIG, the lone financial stock in my watch list, the only one that had time from an earnings point of view. Probably not much to work with, though, at least as of right now. You have a nice little pullback developed on AXSM, testing that old resistance level, sitting on the 20-day moving average, back to back, sold off on the intraday, rallied up, poke our nose above today's high, get back above that 9 EMA. That might be something worth peeking at. On the other side of things, Portland Pharmaceuticals here, Portola, I guess, not Portlandia. So still a breakdown candidate from the reports last week. A nice movement in AME. We looked at these guys yesterday, kind of following through on that bullish breakout. We looked at Big, of course, Disney, FNB. Little bit of a breakout here today as well. You've got another breakout going on potentially on Marriott as well. Had a super nice breakout here today on Ross. Maybe we need a little bit of development early next week, but that was a very big break, big spike in volume, really nice movement, really strong sector. I think that's I don't know how you get into this. Maybe we'll see something develop next week, but with that movement, that really strong movement through resistance, I thought they belonged there. Of course, we looked at Cisco, got Keys, you got some different semiconductors kind of showing well, right? As we saw looking at SMH. So depending on what kind of charts and what kind of companies you like, there's certainly breakout candidates in Marvel and in Keys, pullback candidates here in JBL. I need a little upward movement, but I still think they're an interesting place to be. So, and my lone utility, because it kind of lined up with the break of the utility ETF, probably best, was ES. So we're going to get over to the coaching meeting, see what the coaches are up to, and get this put together for myself and for you going into next week. So ladies and gentlemen, that is going to do the market recap for today and for the week. But as always, thank you so much for joining me. It is my pleasure. I appreciate everybody's time. Those of you live, those of you who catch it later, always appreciate it. I hope it helps you out, gives you some ideas, or at least helps you kind of think through the market. I know it helps me. I love talking through it. It really is it's a different feeling, instead of thinking through it, talking through it. So I really enjoy doing it. I hope you guys find it helpful as well. As always, be sure to subscribe to the channel, hit that notification bell. Join us over on Twitter at Tackle Trading, on Instagram at Tackle Trading. If you do the Facebook thing, hey, join over on Facebook. I'm not a Facebook dude, but that doesn't mean you aren't a Facebook guy or gal. Of course, if you are not a pro member, be always invited. You know the drill. Head on over to tackletrading.com. Shoot us an email, team at Tackle Trading. Tell them Frank sent you. We'll get you hooked up with a free trial so you can see what it's all about. We'll get you those scouting report meetings here this weekend, here tomorrow sometime, mid-late afternoon. So you have some time to get through that. We should have some interesting candidates as we kind of walk through. I had a minute and I peeked at some of the other coaches' charts, and there's some interesting ones they've got going on too. So it's going to be a lot of fun. We should have some good setups here. So we'll get that all up for you. And I'm glad to hear that, Rick. Thank you. Thank you for joining us. I'm glad you find it helpful. All right, guys. Well, I'm going to let you get out of here. But again, thank you so much for your time. You guys have a great weekend. Be ready for Monday. Looking pretty bullish. Make sure you have a bear or two in your watch list, because you never know, right? You never know how it's going to go, on Monday mornings. So we'll see where it goes. Right now, it looks like there's no real reason not to believe that it's going to be pretty darn bullish, at least to get things rocking and rolling here early next week. So with that, guys, get out of here. Have a great weekend. Thank you for your time. See you on Monday. Bye, everybody.